welcome to the weekly roundup for the week ending Friday the 16th of April. Hope you enjoy the weekly reports. Please do subscribe to receive regular stock market content, and any questions drop them in the comment box below. Finally as well, just to let you know, obviously on the website, the Research Centre, feel free to sign up to receive any reports, tech stocks, bank stocks or IPOs. Right, this week, main theme has been on the global economic recovery. Earlier on this week, the focus was on the UK economy reopening, optimism surrounding the UK economy and the recovery has really helped the FTSE scale up to the 7,000 mark. Attention then turned to the US with the start of earnings season there, and also US data amid what has been a quiet week in Europe on the data front. US earnings season kicked off on the right foot, which in addition to a blowout of US macro data has also helped boost risk sentiment and financial markets across the globe. The upbeat news has overshadowed concerns over the AstraZeneca and the Johnson & Johnson COVID vaccines. So on the macro front, US retail sales jumped to 9.8%, smashing forecasts as Americans receive the stimulus checks. Jobless claims also fell by some 200,000 to 576,000, lowest level since the pandemic started. Interestingly, neither report upset the bond markets, and yields have actually fallen across the week. The FTSE is set for around about a 1% gain across the week, adding to 2.6% gains last week. DAX continues to trade around its all-time high, just up 0.2% this week, but marking its 7th straight week of gains. Over in the US, S&P 500 and the Dow Jones surged to all-time highs, up 1% across the week. Nasdaq's also rallied 1% and trades close to its all-time highs. In the FX markets, falling US Treasury yields have put pressure on the US dollar. The exact reason yields are falling is unclear at the moment. It could be that the market is finally buying into the Fed's low rates for longer stance, or it could be because they believe that any uptick in inflation is temporary. Either way, falling bond yields means the US dollar index trades at around a 4-week low. So pound against the dollar trades up around 0.5%, whilst euro against the dollar looks set to rise 0.6% this week. The outlook in Europe is steadily improving after a slow start to the vaccine program. Germany now expects 20% of its population to be vaccinated by the end of April. Over in the commodities market, oil has surged around 6.4% across the week, rebounding after the 3.5% decline last week. Oil prices have been driven higher by a combination of factors, such as larger than expected during both API and EIS data. A weaker US dollar and an upward reversion to demand growth outlook by both the EIA and OPEC. Gold was also on the rise this week. Precious metals look set to book gains of over 1%, second straight week of gains. So the non-yielding gold is finding support from the falling yields falling yields and the weaker US dollar. So just looking at the stocks now, key movers, Tesco's actually fell around 4% across the week, despite sales surging 8% into 2020 thanks to the pandemic. However, soaring COVID costs overshadowed stronger sales and really ate into the profits, which slumped 20%. Dividends remain unchanged. Over in the US, banks, the main focus for stocks has been the US banking sector, which has kicked off earnings seasons on a high note. JP Morgan, Goldman Sachs and the Bank of America, some of the big names that have reported. So the bank share price has seen some strong start, certainly to the week and indeed to the year, outperforming the S&P 500. So expectations were high, but the numbers have been strong, broadly beating forecasts by a significant margin. We've also had the Coinbase IPO, the cryptocurrency exchange platform firm went public amid a lot of hype, and whilst Bitcoin surged to a record high ahead of the public offering, Coinbase's performance has been a touch underwhelming. Stock traded around 322 after an IPO price of 381. So that's it for this week's roundup. Please remember just to subscribe. Any questions, don't hesitate. Any reports you want to see, any specific topics, let me know. Have a great weekend. Thank you very much.